Hi, Leslie Gu here. Donald Trump has left after his state visit to China. They've talked a lot of things, I'm sure. Is Iran one of them? Definitely. Then, can China help? Or rather, the first question we should ask is like, does China want to help? Of course, China wants to help to settle these conflicts, hoping the oil cargo shipments back to the usual business. But can China help? From what I see is that for China to help settle the conflicts between the US and Iran, the US has to guarantee China that no more bombing, including from Israel, no more bombing, no more attacks on Iran and on the surrounding. And also, the US will also give China guarantee that the US fleets outside the Strait of Hormuz pull back, go somewhere else. And of course, Iran will have to give China the guarantee, okay, no more blockage for the oil cargo shipments. Then we ask, will the US give such a guarantee? Probably not. I would think that what the US want is, hey, China, see, I already come to Beijing to talk to you. So you just go to Iran and say that, well, I'm your biggest oil buyer. You better listen to the US, agree to all those peace agreement points. No, China is not going to do that. And that is to say, the current situations, the conflicts between the US and Iran will continue. A lot of uncertainties because nobody knows, maybe except the US and Iran. Nobody knows when will this end. Nobody knows when they will be able to get the usual oil shipments that they have so that they can bring the inflation down. Nobody knows. And that is also a major factor because of the uncertainty on this war on Iran. Make the markets, the investors, retail investors, fund managers, sovereign fund managers, so on and so forth, very cautious. They will continue to watch very closely the development. And they also will remain very sensitive to any trigger. Any news will set their mood upbeat. Also, any news will make them very worried. And that sentiment will impact the oil and gold price. Now, let's look at these two prices in the coming sessions. Let's look at the oil price. This is the baseline in the coming sessions, given the development so far on the Middle East conflicts, the conflicts between the US and Iran. So this is baseline. And because of the high sensitivity of the market, the the neighboring band, the upper and lower, the immediate upper and lower band, has a very high chance of occurrence because of the high market sensitivity. Anything will trigger upbeat, anything will trigger become very worried. So the two bands, the neighboring two bands has very high chance of occurrence. And at this juncture, I would say that my bias is towards the upward momentum of the oil price. So anything, I would think that any news in general would stand the oil price up. I mean, the situations at this moment, I would think that it will worsen first before it can get better. That's why my outlook on the oil price is biased to the upward momentum of the oil price. Now, let's look at the gold. This is the baseline. And because of the high market sensitivity, the neighboring upper band and low band also has a very high probability of occurrence, like the oil price. But the thing is that for the gold price, given the current situations, my outlook is biased toward the downward momentum of the gold price. Because for the past months, there is a high negative correlations between the oil price and gold price. And one major reason for that is that when oil price heat up, that means oil buyers needs more US dollars to buy a barrel. And how to get more US dollars is to wanting to sell US government bonds and any other US dollar price assets. And also the other thing is to sell gold, because gold in the international market right now is priced in US dollars. So that's why there is, because of this selling pressure for more US dollars, that's why we see there's a downward pressure on the gold price when the oil price heat up. So this is what I see for the oil and gold price in the coming sessions. Thank you for watching. That's all for this video. See you in the next one. Cheers.